Welcome to the Deep Dive. Today, we're going deep into Stock Market Wizards by Jack D. Schwager.
Oh, classic.
We're focusing on two traders, Mark Minervini and Steve Cohen. And I think our listeners are here to learn how these guys approach the markets.
Great choices. Really fascinating stories and strategies.
Yeah, so let's just jump right in and start with Mark Minervini. This guy built a wildly successful trading career after dropping out of high school. It's pretty amazing.
Yeah, and not only that, he achieved a 220% average annual compounded return over 5.5 years.
Wow, that's impressive.
Minervini's story is all about self-education and learning by doing,
Yeah, for sure.
He actually lost all of his initial trading stake early on because of some bad advice he got.
Oh, that must have been tough.
It was a hard lesson, but it helped him create his own approach, independent.
Yeah.
He got fascinated by Jesse Livermore, the legendary trader.
Oh, yeah.
You know his book, Reminiscences of a Stock Operator? That had a big impact on him.
That's like the trader's Bible.
It is. It's a classic. It's got these timeless insights into market psychology and risk management. Minervini took that to heart, really studied those lessons. He even went back and studied historical stock charts all the way to the 1800s.
Wow. To see how Livermore's principles played out in real markets?
Exactly.
That's commitment. But how did he turn all that research into, like, a trading methodology?
So that's where he developed this system that combines quantitative screening with pattern recognition.
Yep.
He's looking for specific things in the charts that have historically shown big stock moves.
So what's quantitative screening exactly?
It's using computer programs to sort through tons of stock data
Okay.
to find ones that meet his criteria. Things like price-to-earnings ratios or sales growth. Even specific chart patterns, things that suggest a stock's ready to take off.
So no gut feelings or hot stock tips. He's got a system.
Right, and here's the really interesting part. Minervini says that to be successful, you need what he calls abnormal responses.
Abnormal responses. Okay.
Meaning, you have to train yourself to go against the usual human reactions, the ones that cause bad decisions.
Oh, like not panicking when everyone else is.
Exactly. Most people sell when a stock drops, but Minervini might see that as a chance to buy, if he thinks the fear is overblown.
So it's all about discipline. Sticking to the plan even when things are crazy.
Yes. And his risk management approach is key there. He always has an exit strategy.
Right.
He never lets a loss get bigger than 10% of his position.
That 10% rule, that sounds like a good way to protect yourself. But doesn't that also limit your potential gains?
Well, it's a trade-off. By capping losses, he makes sure one bad trade doesn't wipe him out. This way he can stay in the game, keep winning long-term.
Gotcha. Makes sense.
Yeah.
So Minervini, he's all about discipline, analysis, and risk management.
Absolutely.
Now let's talk about Steve Cohen. He's got a completely different reputation.
Very different. Cohen, he's known for being fast and intuitive, like trading by gut feeling.
Okay.
A lot of people in the industry call him the best. Yeah, and his track record backs it up.
Okay.
He had a compounded annual return of 45% over 7 years. Almost no losing months.
45% a year. That's insane.
It is. His trading floor, it's a crazy place. Screens everywhere, people making split-second decisions. But Cohen still stresses risk management.
How do you manage risk in that kind of environment?
Yeah.
So fast-paced. It seems like it'd be easy to get caught up and just make a bunch of bad decisions.
Well, he's got a few rules. He always takes some profit off the table when a stock goes his way.
Okay.
So he locks in some gains and lowers his risk. And he scales out of positions gradually if he's not sure about the market.
So he doesn't mind taking profits early or cutting losses?
Smart. Exactly. He's got this famous quote, "If you think you're wrong or if the market's moving against you and you don't know why, take in half. You can always put it on again."
That's a good point. You don't have to be right all the time. Sometimes the best thing you can do is just step back.
Right. And here's a story that shows how Cohen keeps his emotions separate from trading. His kids loved Pokemon, but he shorted Nintendo.
Shorted, like betting it would go down.
Yep. Most people would let their personal feelings get in the way, but Cohen saw the market was turning against it. He made a calculated move.
So he can put his feelings aside and trust his analysis, even if it goes against what he personally likes.
Right.
Sounds like discipline is a common thread here.
It's huge. Both Minervini and Cohen have incredible discipline.
Yeah.
Now, another interesting thing about Cohen, he really believes in empowering his traders.
Empowering them how?
He gives them guidance, information, but then he encourages them to make their own decisions.
So he's not micromanaging. He trusts them.
Exactly. He wants them to think independently and take calculated risks. That
Mhm.
way they build their skills and make the whole firm successful.
That's so interesting compared to Minervini's system. So many ways to be successful.
That's right. It's amazing how two very different personalities and trading styles can both achieve incredible results.
Yeah, it is amazing. Two totally different styles. You have Minervini, the meticulous researcher, building a system based on historical patterns, and then Cohen thriving in that high-energy environment, trusting his gut, empowering his team.
You know, it shows that there isn't just one right way to approach the market. The important thing is finding a style that works for you, your personality, how much risk you're comfortable with, your goals, all of that.
That's encouraging, actually. I've been trying to figure out what kind of trader I want to be, and it's good to know there isn't just one path to success. But even though their styles are so different, are there any common threads that connect Minervini and Cohen's approaches?
Definitely. One of the most striking similarities is their focus on risk management.
That seems to be a theme with all the greats.
Absolutely. And their methods might be different, but they both get that protecting your capital is crucial. Minervini, he's got his strict 10% stop loss rule to limit his losses. In Cohen, he emphasizes taking partial profits, scaling out of positions if he's unsure about the market to manage his risk.
So it's not about making big bets and crossing your fingers. It's about being strategic and controlling your losses so you can stay in the game for the long run.
Precisely. And another thing they share, an incredible work ethic. Both Minervini and Cohen are constantly trying to learn more, improve their understanding of the
It's
markets.
inspiring to see that level of dedication.
Yeah.
What do you think drives that constant learning? In both of them, I mean.
I think it's a few things. You know, they both seem to genuinely love what they do. They're fascinated by the market, driven to figure it out. And I think there's also a strong desire to succeed, to push themselves further.
So it's not just about the money. It's the challenge, the intellectual pursuit, mastering something really difficult.
Absolutely. And yeah, the money's a nice bonus, of course. But there's something else that's often overlooked, an unwavering belief in their own abilities.
So it's not just about the strategy, it's about having the confidence to execute it.
Yes. Both Minervini and Cohen trust their analysis, their instincts, their decision-making. And that inner confidence lets them stick to their plans even when things are uncertain.
Makes sense. Now, let's bring this back to our listeners. What are some key takeaways they can apply to their own investing, whether they're more like Minervini, the systematic type, or Cohen, who's more intuitive?
Good question. One big lesson from both traders is that success isn't instant. It takes time, work, and learning from your mistakes.
So no overnight wizards. It's a process.
Right. And it's about finding what suits you. Don't force yourself into a style that doesn't feel natural. Technical analysis, fundamental research, or a mix, whatever resonates with you, develop your skills in that area.
It's really helpful. There are so many different approaches out there, it's easy to get overwhelmed. Sounds like the key is to find what works for you and stick with it.
Exactly. And remember, even the most successful traders have losses. The key is to learn from them, adapt, and keep going.
So it's not about being perfect. It's about resilience, learning, and growing.
Precisely. And that brings us to another point. Both Minervini and Cohen highlight the importance of a trading plan,
What does that involve?
having clear goals, a strategy for finding opportunities, specific rules for entry, exit, and risk management.
Not just winging it. Have a structured approach and be consistent,
Right, a plan helps you make rational choices, even when things are heated and emotions are high.
like having a roadmap to guide you through the ups and downs.
It is. It keeps you from making impulsive decisions based on fear or greed.
Okay, so we've talked about risk management, learning, a trading plan, and confidence. But what about the psychology of trading? Both Minervini and Cohen are amazing at controlling their emotions, staying rational, even under stress.
That's a great point. The mental game is just as important as the strategy. Minervini talks about abnormal responses, training your mind to react differently to the market than most people do.
Overcoming those natural instincts that lead to bad trades.
Exactly. Like, most people want to buy when a stock's rising and sell when it's dropping. But that often leads to buying high and selling low, the opposite of what you want.
Right, so train yourself to think differently. Stay calm and rational, even when the market's volatile.
Exactly. And that takes practice, discipline, and understanding your own emotional triggers.
It sounds like something every trader needs to work on, regardless of their experience.
Absolutely. It's a constant process. Even pros like Minervini and Cohen are always working on their mental game to stay sharp and avoid emotional mistakes.
This has been really insightful, but it makes me wonder, Were these guys just born with a talent for trading? Or is it something you can learn?
That's the big question, isn't it? Were they just wired differently? Or did they just work really hard and learn over time?
Nature versus nurture,
Hmm.
but in the world of finance.
Exactly. And while some people might be naturally good at certain things, I really think anyone can learn to be successful in the markets if they have the right attitude, the dedication, the willingness to learn.
So it's not about being born a prodigy. It's about putting in the work, understanding how the market really works.
Right. Minervini and Cohen's stories, they show that success is usually a combination of things. Natural talent, hard work, constantly learning, always striving to be better.
Yeah?
And they weren't afraid to question things, to trust their gut, and most importantly, they learned from their mistakes.
Their stories show that everyone, even the best traders, they have losses. What matters is how you handle those challenges,
Right,
right?
absolutely. It's about being resilient, changing your strategies when you need to, and never giving up. And, we've been talking about these two specific traders from the book, but there are lots of other successful investors out there with all kinds of approaches.
So the takeaway is there's no one right way to trade. It's about finding what works for you, building your skills, and managing your risk.
Exactly. And it's about constantly learning, growing, and adapting because the market's always changing.
This has been a really great deep dive into stock market wizards. I feel like we've learned a lot from Minervini and Cohen, even though they have such different styles.
And remember, it's not just about making money. It's about pushing yourself, trusting yourself, and constantly learning and growing.
As our listeners go on their own investing journeys, I hope they remember that. Maybe they'll find they're more like Minervini, the researcher, with his systems. Or maybe they'll thrive in a faster, more intuitive environment like Cohen's.
Or maybe they'll find their own way, something completely new. Possibilities are endless, really, as long as they're willing to put in the work, stay disciplined, and keep learning.
Couldn't have said it better myself. The world of investing is full of opportunity. Anyone can be successful if they have the right mindset and approach. So until next time, keep diving deep, keep learning. And hey, who knows? Maybe someday we'll be talking about your trading secrets on the deep dive.
Maybe so. Happy investing.